Welcome, my name is Chris Watling. I'm the CEO and Chief Market Strategist of Longview Economics and one of the key authors of The Rag Trader. This is your morning market hit for Monday 5th of February. It's around 9 a.m. London time, and what we want to talk about is what matters for traders. If you want to trade equity index futures on a 1 to 2 week basis, you want to trade S&P500 futures either long or short, what should you be looking at? What factors should you be thinking about? How should you go about deciding how and when to enter and exit those trades? That's what we're going to dig into in this video. And the first thing you need to think about when deciding on those 1 to 2 week trades in those equity index futures is how's the market behaving? What's the price action line? Because last week, despite tech earnings disappointing in the first half of the week, despite a Fed pushing back on rate cuts, and despite continued rising tension in the Middle East, we saw the S&P 500 close at a record high on Friday. And indeed, it achieved that on Friday despite a really strong non-farm payrolls data, a backup in US 10-year bond yields, and a strong dollar. Both of which you would have thought would be negative for the equity market, certainly have been in recent quarters and last couple of years. So the price action is critical, the context is critical. How does the S&P 500 achieve a week where it's up 1.5% despite all those headwinds? So what's going on? Why is the market rallying? Why was it up on the week in the face of all those challenging headlines? Well, there's a few things going on. First of all, take a look at the Brent oil price. Yes, there's rising tensions in the Middle East and more bombings each and every day, pretty much it seems. Despite all that, Brent sold off pretty hard at the back end of the week. Just look at the candlestick chart that we're putting up in front of you. It failed its 200-day moving average and moved sharply below that in the back end on Thursday and Friday. Of course, a falling oil price is a positive for the equity market. It means there's more liquidity elsewhere, less inflationary pressure, etc., etc. Secondly, take a look at our models. Our short-term 1 to 2 week market timing models, which we publish each and every day in the Rag Trader that comes out for subscribers. Those models moved nicely back towards buy levels by the middle of last week. A lot of them had sell signals at second half of January, but as you can see by the middle of last week, they're starting to get on or close to buy. Take a look at combined RAG 1 plus RAG 2. RAG is risk appetite gauge. These are our key risk appetite models that we look at each and every day. This combined model was very close to buy by Wednesday. Take a look at the NASDAQ technical scoring system. There's an aggregation of a whole bunch of technical indicators for the NASDAQ scored and equal weighted and then scored. Again, pretty close to buy. And then on a longer term basis, if you look at a sort of percentage of US stocks that are overbought at very low levels last week, and with that back on buy. So that's also helpful. The technical setup, the model setup for the market on that 1 to 2 week basis was starting to look pretty interesting by the middle of last week. And then finally, of course, you've got the emergency liquidity. One of the key factors in this market in recent years has been the liquidity levels that you've seen. Is there QE or not? Is there QT, etc., etc.? And more importantly, in the last couple of years, what's happening in the RRP, the reverse repo facility, which has been draining over the last 12, 18 months as money market funds and other financial actors have been moving liquidity away from the Fed balance sheet into the normal market environment. That, of course, boosts general market liquidity, which means it's a positive for equity markets and an underpinning for the equity market uptrend because more liquidity is coming into markets in general. And as you can see, there's still $500 billion left in this mechanism to boost market liquidity over the next few weeks. And then, of course, on top of all those factors, you have very strong tech earnings in the second half of the week after the disappointing ones in the first half of the week, with the second half of the week delivering a positive surprise from Meta, Facebook, of course, and Amazon, albeit Apple wasn't quite as good. But Facebook, as you can see the chart in front of you now, up 20% on the day on Friday, Amazon up 8%. So what did we do last week? Well, having stepped back from the market at the back end of the prior week, closed a long position, and we were waiting patiently to see how the Fed and the first tech earnings played out. We stood back on Monday and Tuesday, allowed the market volatility to play out, and then on Wednesday, Thursday, Friday started to try and move along. Unfortunately, we didn't get our entry prices triggered, too ambitious. Of course, the market was nice and strong over the course of that week. So you get a sense of how we're trying to play this as our models are getting back towards buy. We're starting to get interested in the long side of the market and looking for opportunities to play that. So to see how we're going to play it this week, please take a trial to the Daily Rag. Simply click on the link below and we'll send you the Daily Rag Trader for free for a bunch of trading sessions. All you need to do is give us your name and email address. No credit card details required whilst you're taking a trial. and see if you like the product. Or if you're a subscriber, it should be in your inbox early around 8:30 a.m, 9 a.m. London time with our 1 to 2 week views on equity index futures, updates on the models, and our sense of where the market's going to go over the next couple of weeks. So what are we watching this week? Well, there's a lot going on. 3 key themes in particular. It's continuation, firstly, of US earnings season. A whole bunch of companies reporting this week. All sort of interesting, although none quite as mega as the mega cap tech stocks we had last week. But you've got McDonald's, you've got Caterpillar, Alibaba, a bunch of other companies, some in Europe as well. Second key theme, some US macro data out of the course this week, particularly today. We've got the ISM services data point on Monday and also the senior loan officers survey, the credit conditions, how tight are those banking credit conditions? Those will be watched closely. And then there's also a China theme, finally, third key theme for the week, a China macro data theme ahead of the lunar holidays that are coming up. Over the course of this week, we've got Chinese CPI and PPI, and we've probably got Chinese monthly total social financing, monthly lending, although one never knows exactly when that's going to come out. So that's it from us. That's your morning market hit for Monday, 5th of February. Thank you for listening. Please do subscribe to these videos on YouTube and click on like and share on social media. Click on the subscribe button or follow us on LinkedIn, Twitter and or Facebook. Thank you for listening. Stay safe. Trade well.